There has been considerable interest in cryptocurrencies as of late, Bitcoin in particular. So we figured it's about time we do a video and explain to investors how they can gain exposure to Bitcoin itself, perhaps not through buying the coin directly, but through the different products that are available on the TSX index. And we're going to get to that right after this. The interest in Bitcoin is really not all that surprising. Bitcoin has been on a record run as of late, and as you can see here in their chart, it has seen considerable gains in 2020 and 2021. While the price of Bitcoin has since cooled, the crypto story is far from over. So how does one gain exposure to the cryptocurrency? This is what we're going to talk about today. First, we're not going to talk about how to buy Bitcoin itself. There are a myriad of cryptocurrency platforms out there. We're not going to speak on those. We're not going to talk about how you buy physical Bitcoin today. Secondly, we're not going to be talking about TSX listed companies that operate in this space. So we're talking about anyone who mines Bitcoin, those who are perhaps adding Bitcoin to their balance sheet. We're not going to talk about those today. Our main focus is to talk about the funds that are available and funds that are expected to track the price of Bitcoin in particular. As of filming this, there are 5 funds that are trading on the TSX index whose goal is to track the price of Bitcoin. A 6th is on the way. There are 2 types, closed-end funds and ETFs. The 3 closed-end funds include 3iQ's Bitcoin Fund under the ticker qbtc and qbtc.u, 9 Points Bitcoin Trust under the ticker bitc.un and bitc.u, and CI Galaxy Bitcoin Fund under the ticker BTCG.UN and BTCG.U. Each of these 3 closed-end funds have varying differences, but today we are going to take a deeper look into 3iQ's The Bitcoin Fund, which is by far the largest fund in Canada. I also wanted to note that CI Global Asset Management announced on Friday, February 26th, that it expects to merge its closed-end fund into a Bitcoin ETF. So that'll leave 2 closed-end funds that are expected to track the price of Bitcoin. So let's talk about 3iQ's The Bitcoin Fund. As a closed-end fund, it holds a fixed number of units. The fund launched in April of 2020 and has subsequently made several offerings via periodic overnight and at-the-market offerings. qbtc trades in Canadian dollars, while qbtc.u trades in US dollars. It's worth noting that for all of these funds that we're talking about today, the .u versions are those that trade in US dollars. The fund carries an MER fee of 1.95%, and the proceeds raised are used to buy and store actual Bitcoin. So in other words, the fund is backed by actual Bitcoin, and its purpose is to closely track the price of Bitcoin. Bitcoin is held in trust by Gemini Trust Company, a digital currency exchange and custodian. It appears to be the custodian of choice for all of the ETFs and closed-end funds we are going to talk about today. As a closed-end fund, however, it is going to be a little bit more volatile than Bitcoin itself. Because it has a fixed amount of units, high demand can result in the fund trading above net asset value, and the opposite is also true. Low demand can result in a discount to NAV. You can see based on its chart that it is not a perfect correlation to the price of Bitcoin. Furthermore, as per our regulations, any new offerings cannot be issued below NAV, which protects the existing unit holders. There are a few other important details that we can go through around QBTC, but we're going to talk about those a little bit later. Now let's look at the 2 Bitcoin exchange traded funds, so ETFs, and we're going to talk about them as a duo because there's very little that separates them. Let's first talk about the Purpose Bitcoin ETF, which first began trading on February 18th and became the world's first publicly traded Bitcoin exchange traded fund. The fund saw record net inflows and reached 421.8 million in assets under management in only 2 days. While BTCC and BTCC.B trade in Canadian dollars, the BTCC ticker is hedged to the US dollars. For its part, the BTCC.U ticker is traded in US dollars. So I understand how these can be very complicated. It's important to always just double check their website in case you're unsure. As you can see here, they have it clearly listed. So just make sure that before you buy something, you are understanding which ticker it is you're buying so you can understand the minutiae of the detail. The Evolve Bitcoin ETF, under the ticker EBIT, began trading only a day later. Much like the Purpose ETF, Evolve has a USD version and a Canadian version of their ETF. We mentioned it at the start, but there was very little that separated the two in terms of an ETF. Unlike closed-end funds, ETFs more closely track the daily price movements of the commodity they track. In this case, Bitcoin, and we expect that to be the case for both of these ETFs. The Purpose and Evolve ETFs both launched with MER fees of 1%, and much like 3iQ, the Bitcoins are held in trust by Gemini. So to be honest, there is very little that set these two ETFs apart. As the first to the market, Purpose's ETF launch came with pretty big fanfare and captured the attention of retail investors. Evolve, which essentially offers the same product, flew under the radar and hasn't attracted nearly the same level of inflows. As of writing, Purpose's ETF holds $602 million in assets under management, while Evolve's only has $40 million in assets under management. So it's pretty clear, the early launch of the Purpose ETF had a significant impact on the amount of inflows that went into that product. So what did Evolve do? Only a week after launching its product, Evolve actually cut its MER fees to 0.75%. As BNN Bloomberg describes it, a price war is brewing, and that is a good thing for investors as it lowers the fees. Given that nothing materially separates the two, lowering fees is one way to make a distinction between one ETF over the other. Outside of fees, there's another factor that separates these two ETFs, the price point. The unhedged Canadian versions of BTCC and EBIT are currently trading at $8.82 and $24.61 per share. While the price per share should be irrelevant, as they are dependent on the amount of Bitcoin the fund holds, there is a psychological effect at play here. Retail investors tend to be more attracted to lower prices per share. And the reasoning is simple. One could almost buy 3 BTC shares for each share of EBIT. However, that logic is pretty flawed, and the price per share comparison is irrelevant. Why? Well, since both Bitcoin ETFs track the daily price movements of Bitcoin, they will each rise and fall accordingly. So if the price of Bitcoin rises by 5%, then $1,000 invested in either BTCC or EBIT will also rise or fall by 5%. There is no difference. Bottom line, don't let share price sway your decision. It really has no impact on the total returns of your portfolio. Now let's circle back to the MER fees, because these do have a pretty significant impact on investor choice. It's also one of the reasons why 3iQ's product, qbtc, the closed-end fund, actually saw a pretty high net outflow when these two ETFs launched. Why would an investor pay 1.9% in fees when there's an alternative and more liquid product trading at half the fees? At one point, the big outflows for qbtc led to a pretty significant discount to NAV once those ETFs launched. When this was happening, we actually cautioned Stocktrades premium members not to sell their qbtc at a discount. Remember, qbtc also holds the crypto itself, and these holdings didn't suddenly disappear. The discount to NAV was pretty significant at one point, in the mid to high teens. So astute investors would have bought more qbtc instead of buying the newly listed ETFs. Why? Because they could have gotten exposure to Bitcoin at a discount. Selling qbtc at such a discount made no sense. To further the point, 3iQ came out with news of a normal course issuer bid, to which it could purchase for cancellation up to 10% of the public float. The move was a smart one, and because it has a finite number of units, the discount to NAV has since narrowed. Outside of the obvious, there's actually another reason why investors should not sell their qbtc at a discount. And that's because, according to the company's prospectus, once a year, in June, investors have the opportunity to exchange their shares at NAV. This means that if the discount persists, shareholders have a better exit option rather than selling at a discount to NAV. Sure, there will be fees involved, but selling at a double-digit discount makes absolute no sense. Finally, there's actually a third reason why investors should not sell their qbtc at a discount. 3iQ is actually in the process of launching their own ETF product. And much like CI Financial, there are rumors that shareholders will be able to exchange their qbtc units for the newly listed ETF units. Right now these are but rumors, but if that comes to fruition, why would one sell their qbtc at this point in time? I don't know if I've said this enough, but bottom line, don't be selling your closed-end funds, that includes qbtc and the others, at a discount to NAV. It makes absolutely no sense. So the ultimate question becomes, which product should you buy? Well, the answer is it depends. There's definitely a few factors to consider. We talked about fees, and typically the lower the MER fee, the better. And this is where the ETFs hold the advantage, as they usually have lower fees than closed-end funds. All else being equal, the ETF with the lower fee is likely to be the most attractive. Right now, that's Evolve. That could change tomorrow if the Purpose ETF also lowers their fees. However, as we alluded to earlier, fees are but a part of the equation. The maximum upside from these ETFs is the increase in the price of Bitcoin, minus fees. Why? Because they will closely track the price of Bitcoin. For their part, closed-end funds actually have a few tools at their disposal to maximize returns for shareholders. When NAV is at a discount, they can buy back units and reduce the float. We see this with 3iQ doing this right now. This has a net effect of decreasing the number of Bitcoin per unit and increasing the value of those units. The opposite is also true. The fund can issue shares when NAV is at a premium and buy a Bitcoin at a discount to the offering, which once again benefits unit holders. Extra returns can be made as the returns aren't solely dependent on the price movements of Bitcoin. While it will closely track the price of Bitcoin, there are definitely some opportunities to increase your returns in a closed-end fund. Leaving aside the reasons for owning Bitcoin aside, if you're looking for exposure to Bitcoin through an easy way that can be held in TFSAs, RSPs, and the like, both ETFs and closed-end funds are excellent options for investors. And please don't automatically discount closed-end funds. They have their place. And when trading at a pretty significant discount to NAV, they are even more attractive than the ETFs. So pay attention. The answer to which of these products should an investor buy is likely going to be dependent on that point in time for which you're ready to buy. Because at that point in time, perhaps the closed-end funds are trading at a pretty big discount to NAV or a premium to NAV. If they're trading at a premium, then you might want to go for the ETF instead. But if they're still trading at a double-digit discount to NAV, then perhaps a closed-end fund is a better option. They are both excellent products and both have a place in investors' portfolios. Hope you enjoyed the video. Please let us know in the comments below which of these funds do you own. Personally, I own QBTC. I own the closed-end fund. I'm likely going to be purchasing the ETFs moving forward, but I have zero intentions on selling my QBTC for the reasons mentioned. In fact, I'm going to be closely monitoring. If QBTC trades at a pretty big discount, I'm likely going to buy that instead of the ETF. If it trades at a premium, I'm probably going to buy the ETF. So I hope you enjoyed the video. Hope it makes it a little bit clearer for you which options you should take and what you should and should not do in the case of buying Bitcoin funds. Please like the video and subscribe to our channel for more great Canadian content. Till next time.